Mastering money.
Well, every Tuesday at 7:35, we have the great opportunity to go over some benefits, and we do that with the Arizona Benefits Specialist from Arcwood Consulting. Brandon Oliver and Peter Rowe join us every Tuesday at 7:35 to give us some in-depth insight to what's going on. And today we are happy to have the owner of Arcwood Consulting, Peter Rowe, in studio. We got a lot to talk about, and we say good morning, Peter. Hi.
Good morning. How are you today?
Are you going to get your auctioneer voice going again?
No, I'm going to try to slow down a little bit. I think we realized, we're putting a lot of information into 10 minutes.
But you know what? Honestly, that's what we were so excited to have you guys on this, because the information you give is, it's really good. It's chock full of good stuff for whether you're an employer or even if you're an employee.
Right.
There's great knowledge that needs to be known, and a lot of it is kind of confusing. So you can always go back and listen on the podcast. All right, let's talk about today is October 1st, right?
Correct.
So a lot of people say, well, it's almost Halloween. Yeah, fine, that's great. But the scary thing is not that Halloween's around the corner, it's the final quarter is here. And there's a lot for businesses that go on in the final quarter.
It is the race to the finish line, absolutely. So what healthcare reform has effectively done is kind of changed our structure, where we used to have companies renewing their insurance plans throughout the year. But with healthcare reform coming online, most of our small businesses are now 12-1, and then virtually all of our larger businesses are 1-1. So there's a lot that happens, and boy, Thanksgiving hits, and there's like 4 weeks left of actual working time in the year, so there's a lot of compression.
This might sound like a really dumb question, but I'm going to ask it anyway. Do the companies know if they're large or small? what is that cutoff?
I would probably say the large companies,
They know. I guess the small companies.
Yeah, but I guess as healthcare reform defines it, it's 50 and above is kind of their large definition, and then 50 and below, because that's the cutoff for where your responsibilities are.
Right. So really, 50, even though it's a good-sized company, I don't know if I'd call it large, right?
Correct. Yeah, it's more of a mid-size, small to mid-size, I think, in reality. But just kind of in how healthcare reform is designed on who they think should be responsible for it, that's the line in the sand that we have in Arizona.
And we've talked about this the first few weeks of doing the Arizona Benefits Specialist. Now is a good time that people are looking at renewals, looking at their plan, looking to see if it makes sense. Are they getting the most out of it? And people are spending a lot of money on health insurance. You want to make sure if you're going to spend that much that you're getting the right one.
It's ridiculous. The numbers that are coming out for this year, we're only getting a 6% average increase, which sounds, okay, because it's single digits. I'm the guy that walks into the office and says, I got fantastic news. Your rates are only going up by 10%.
Right.
The door still slams in my face. But if you kind of peel back the onion, that 6% is driving our family premiums up to $20,000 a year, which, that's the cost of a Civic. So you could buy
a brand new car, you could have health insurance.
Yeah, your monthly payments are probably the same as an Escalade.
Yeah, no, I was looking at that. I was telling you, I think mine is $1,300-1,400 a month, and that's a whole family, and that's with a subsidy. That's what blows my mind.
Yeah, it's awful. And individual premiums are $7,000. And so really, what we're trying to focus on right now is educating the participants that what they do matters. What healthcare reform has done is kind of given us an annual cap on what we as an individual can spend during the year. Traditionally speaking, it's going to be $6,000-7,000 a year. However, if we can educate the participants that, if I go to a hospital that's for a knee replacement and they're going to charge me $35,000, but I can go a couple miles down the road and I can get it done for $15,000, and the morbidity rates are the same or even maybe better at the less expensive hospital, then let's go there. Let's save the plan $20,000, because that cost is going to help drive the premiums that I'm going to pay next year.
Exactly. We are visiting with Peter Rowe with Arcwood Consulting. This is our weekly feature here on Money Radio called the Arizona Benefits Specialist. And we talk about all kinds of benefits, whether it's health benefits, payroll, then, of course, the 401k space. Now, you guys talked, I think it was last week, about the Quacka, or maybe it was 2 weeks ago. Quacka.
Last week, Quacka.
Was it last week? Yeah.
We are the industry of acronyms.
Yeah.
We don't have an acronym that we don't know how to speak.
Yeah, we're going to make this show, we're just going to call it Acronym Specialist. But let's talk about the Quacka, because actually, I think you guys got a phone call from someone. You were able to save them quite a bit of money.
We absolutely did, yeah. It sparked some interest, and somebody gave us a ping and said, can you just do some due diligence and some reviews? And based upon their census and their turnover, we're able to save them about $300,000 just by going into the third type of a safe harbor match.
Hold on, you glossed over that really quickly, Peter. How much?
$300,000.
Is
what it penciled out to for the demographics.
That's pretty big
it was a
savings.
Sizable number, yes.
Yeah, so I would think that if there's a business owner out there listening, that should pique your interest right there. That just with the little due diligence and a little, like you said, peeling back the onion, you might be able to find great savings that you didn't even know existed.
Redirect that into some other project that's on the job.
Right. So that's a happy company owner, right?
That is an absolutely happy company. Yes.
All right. So quickly, what kind of give me a once over on the Quacka again, and really who maybe it fits.
So the Quacka is the third safe harbor, and it couples in with the automatic enrollment. So with a 401k, as long as you do an automatic enrollment where the participants are in the plan, it's not mandatory. They can always opt out, but as long as they're enrolled automatically with a step up in savings, and you have this match, which is a half of a point less than the traditional safe harbor match, and you get a vesting schedule on it, which is a 2-year cliff. So, if you have a higher turnover population, it gives you the same test results. The higher the compensated can contribute the same dollar amounts, so you're kind of foregoing all those penalties. However, the load on the match cost is a lot less, about 12.5% less, and then you factor in the vesting schedule as well, and that's going to pull up some extra change too.
We're visiting with Peter Rowe. This is the Arizona Benefits Specialist here on Money Radio, Arcwood Consulting. Peter and Brandon come in every Tuesday and tell us about a lot of great stuff that is going on. Do you guys do startup 401ks?
We do.
Okay.
Absolutely.
So I think now is a time where a lot of business owners actually take a peek that don't have a 401k.
Correct.
And maybe they've grown big enough to where they're like, or they've had enough employees like, hey, yo, we'd like a 401k.
Yeah, we're in a tight market, so having the benefits is good.
Right. So what is the process of a startup 401k from like a time horizon? What's it take? 3 months? 2 months?
Oh, we could get one up and running in 60 days.
60 days.
We have notice requirements, so they have to go out by December 1st for a January 1st effective date. And then the time spent before that is really sitting down with leadership and just making sure that we understand the missions, the goals, the objectives of actually having the plan, set that up correctly, budget it, and then educate the participants.
So let me ask that question. Someone's ready to do it, or they're thinking about doing it, but they go, I'm not sure if we're going to have this ready by December 1st to send out that letter. What if they wanted...
We are. We'll be ready.
No, you. I'm saying them. I know you're ready. Listen to the question. So now if I fast forward and a company comes to me in December and says, hey, I want to start in February, we still good?
We can start something up in February, yes.
Okay.
We can.
All right, that's good. I like it. Again, you're listening to the Arizona Benefits Specialist, Arcwood Consulting, Peter Rowe. What else do you have on the docket for me?
Really, what we're educating participants on right now, just because the rates are kind of filed into the healthcare system, is we're making sure that everyone really understands the tools that are available to help them manage their healthcare. We're looking at about a 35 to 40% adoption rate for participants using health savings accounts, which are coupled with high deductible health plans. And we just really encourage individuals that they need to learn how those plans work, because the math is typically always going to work out to their advantage. And really, it changes the dollar or the value that you use to spend on your health care. So I'm like, if you had a procedure and it cost you $6,000 and you're paying that from your checkbook, and that probably you had to earn, $7,500, $8,000 so you can pay the service their fee. Well, if you wash it through a health savings account, you're really only earning $6,000. So it's a much stronger value in the dollar. And if you have monies left over at the end of the year, you get to keep it. So it's things like that. Employers are utilizing narrow networks. That's becoming more and more common because it's a way to help reduce expenses. And so we're just really encouraging individuals to make sure that they look into the network, make sure the providers that they want to see are covered. However, if they are going to a provider and they're not sure and they get a surprise bill, we're educating them that Arizona has a surprise billing legislation that took effect on January 1st of this year. And it's an arbitration process. So if there's a bill from a provider inside of a hospital, ER, radiology, anesthesiology, etc., if it's over $1,000, call the Department of Insurance and say, you know what, they're billing me out of network and I need some help, and they are absolutely there to help you do stuff like that.
This is the Arizona Benefits Specialist, special segment on Money Radio's Business for Breakfast show every Tuesday morning at 7:35. One of the participants from Arcwood Consulting, either Brandon Oliver or Peter Rowe, will be along, sometimes both of them. Today it's Peter. And Peter, before I let you go, if people are listening like they were last week and called and inquired within, what's the best way to reach you guys at Arcwood Consulting?
Two different ways. Main phone number is 602-726-6280. And then the phone tree or Lisa will pick up the phone and direct us. Or our email is info@arcwood.com.
Brandon Oliver and Peter Rowe are investment advisory representatives offering advisory services through Arcwood Financial LLC, a registered investment advisory firm, employee benefit consultants, and brokers offering group insurance and self-funded employer-sponsored employee benefit plans through Arcwood Benefits Consulting Incorporated, and offer human resource and business operation consulting through Arcwood HR LLC, Arcwood Financial LLC, Arcwood Benefits Consulting Incorporated, and Arcwood HR LLC. Yeah, you got it. DBA Arcwood Consulting are independent companies. Arcwood Consulting does not offer legal, tax, or compliance advice. For questions or to request more information, please call them at 602-726-6280 or email them at info@arcwood.com. That segment is 10 minutes. Disclosure, another 10 minutes.
I think we need a few more acronyms, though, in our disclosure. I don't think we've got that covered.
I'd like to strangle whoever wrote that and the fact that I have to read it. We might get that pre-recorded. Peter Rowe, always great to see you. Thanks for the info, and we'll see you next Tuesday, all right?
A quick shout-out to Jackie and Nicole.
Shout out.
Got some friends from Rockaway Beach, New York, and they're here. I'm sure they're sitting down right now relaxing, enjoying a cup of coffee with my wife, Kathy. Just quick shout-out. Thanks they're here, and see you in a few.
There you go. And nice weather for you.
Oh, you know what's funny, too? Whenever I talk to these guys about insurance, they face of just disbelief. And so I can only imagine what your audience or our audience is like when I'm speaking up here. Like an auctioneer.
Well, look at Ken right now.
Good point.
That's pretty much the rest of the way. That is the Arizona Benefits Specialist.
Good, Ken. Yeah. You do look good.
Yeah. Arcwood Consulting, Peter Rowe, our guest this morning here on Business for Breakfast.